What's going on, traders? Welcome back and happy Wednesday. Hump Day! It is August 13th. We're diving into today's Fact Check Me session. I like it. I said it the other day. It rings. It sounds great. Fact check me. And so you can fact check me on Monday how we top ticked in Q at 28,804 for a 200-point move to the downside. So not only can you go back and fact check me, you can learn a lot from the analysis breakdown on how we even identified 28,804 being the area for the short and how we had targets at 28.6 for a 200-point move. So check that video out from Monday. You guys are going to learn a lot, but you guys can do that again for today's breakdown. Is take this, run with this, learn from this, go back at the end of the day, see how the market moved based on the analysis that we've done, and again, fact check me, all right? One thing that I do want to clear the air with, I misspoke on Monday. I said I drop these videos every day. I drop these Monday, Wednesday, Friday, every day that I'm actively in the market. So that was every day to me, but to you, you were thinking 7 days a week. No. Monday, Wednesday, and Friday, around like 8:30, 8:45, these videos will be uploaded well ahead of, market open to give you guys the opportunity to watch these, get these levels set up, the plans built, see how the market moves. All right, so we're going to go ahead and dive into it. ES, not liking the fact that we're just sitting at all-time highs. All right, so with ES, I'm really treading lightly today. I don't see A+ opportunity. Only thing that I see on ES is we have some lower time frame overlapping demand. All right, so we have some 1-hour demand, drop, base, rally. Take ES down into a 30-minute, drop, base, rally. You got some 30-minute inside of your hour. Go into a 15-minute, you see the 15-minute drop base rally. So we have a 15-minute, 30-minute, 1-hour overlap demand, right? So we just build a quick plan to see if the risk reward would even make sense, right? So entries off the midpoint of the overlapping zone, we'll want to put stops underneath all of those prior lows. You're going to go about 5 points of risk. Look left. Where is the first target? Well, depends on how we pull back. There could be some lower highs as we pull back into demand. So those would have to be targets. But main target would be these highs that we would potentially sell off from into that demand. So that's at least main target. Do I think that's a realistic target to have? Yes. Why? Because I'm trading with the trend. I'm trading with the momentum. Right? If this was a counter trend trade, I wouldn't be looking for full-blown follow-through. But since we're with the trend here, we got a lot of strong momentum to the upside. Realistically, getting back up to those highs, easy peasy. So what's the plan? It's almost a 4-to-1, right? So it's naturally going to be a lower probability setup. We have 3 lower time frame zones of overlapping demand, but that's it. All right, we don't have any other confluence. So when I have, minimum analysis like this, minimum confluence, it really comes down to my risk reward, right? If this is like a 2-to-1 setup and I have an average setup in front of me and I have a 2-to-1 plan, I don't get that excited because it's a lower probability setup. Knowing it's a lower probability setup, I want to offset the lower probabilities with better risk reward to offset that. So, hey, 4-to-1. Yeah, it gets me excited, right? We have good realistic 4-to-1 potential, risking about 5 points. We can get about 20 to the upside. I'll entertain this. If we do get that drop on down into that overlapping demand, I'll take a trade. I'll risk the 5 points, and I'll see if we get that nice little grind back up into those highs. So that's what I see with ES. It's decent. It's not crazy. I'm not like super excited, like, yeah, this is the best trade of the day, but there's something here. It's decent. And that's going to be the plan with ES, right? NQ, we kind of got the same thing going on, but we only have 2 zones of demand. I couldn't get 3, 4, any more. Hey, that rhymed. Overlapping zones. They're just not there. It's 2. So I like ES more than NQ. Even just looking at ES, at least we have 3 zones. NQ, we have 2 zones. If I'm going to take a trade, I want minimum of 3. I got 2 on NQ, so I just can't get behind it. I'm not crazy about it. All right, so NQ, I'm going to pass today. YM, couple things I see with YM. I think there could be some decent potential. We got some daily supply, right? So we do have this daily drop base here on the 30th of July, followed by the drop. So there's your base from July 30th on the daily. So that's going to be your daily supply. Then we get this down into a 4-hour time frame. There is your 4-hour supply that's inside of your daily. All right, so we got 2 overlapping zones. Now let's go to a 1 hour. See if we have that 1 hour. We do, and that 1 hour looks sweet. All right, so that's going to be the 1 hour zone that's inside of the 4-hour zone that's inside of the daily zone. That gives us 3 overlapping zones, and one of them is a higher time frame, such as the daily. So I like this opportunity up here. Daily zone, 4-hour zone, 1 hour zone. Without additional confluence, it's cool. At least one of my zones come from the daily. And that's the biggest difference with YM and ES. ES, I have 3 lower time frame overlapping zones. Lower odds, I really want to have additional confluences, right? Look at YM, 3 overlapping zones, but one of those is a daily, which is a lot more significant than those lower time frame zones. So this opportunity it's more significant. It's going to be higher odds, even without those additional confluences, right? Because one of those zones come from a larger time frame, in this case, the daily. So where do I want to take a trade? Right inside of the overlap, right here. So the overlap's going to be right around 44,830. So ideally, that's going to be the entry, putting stops above the overlap, right? So we're going to risk, probably 40, 50 points total. And we got to look left and see what our profit potential is here. So look left, if we come up into supply, we get a nice retracement pullback. Look left, prior highs, prior resistance, potentially new support for the retest. That would be our main target there on YM. So we got entries identified based on the 3 overlapping zones. We know where we want to put stops based on trading off overlapping zones of supply, and simply look left to assess where's the most realistic target. Main target's going to be back down around 44,605 into those prior highs. All right, so what's the plan? Almost a 5-to-1 here on YM. Almost a 5-to-1. It is a 5-to-1, actually. So that's going to be the trade plan with YM. 3 overlapping zones of supply getting in inside of the smallest overlap right here. That's going to be the 1 hour overlap. Right in the midpoint of the 1 hour, ideally, is the best of the best entry. So again, that's 44,830. Entries, we're going to go stops around 44,875, right above the 3rd overlap. And then target back down into those prior highs of 44,605. You got about a 5-to-1 risk reward setup, and that is going to be a good opportunity for today. This looks tremendously better than ES and Q. So YM, as of right now, is number 1 on the watch list. Top of the list, this has the highest odds of setting up and actually giving us that move that we're expecting. So that's on YM. Silver got close to demand in that golden pocket retracement, but didn't quite get down into that level. So no trade on silver, unfortunately. Got close, but not close enough. And then lastly, we got crude oil. We have some overlapping demand. We have some weekly, daily demand, right? So the overlap is down between 61.74 to 62.04. So since we have some larger time frame zones, it already carries more significance than lower time frame zones. I'm already confident just to get in inside the overlap. So entries off the overlap, so that's going to be right around 61.90 entries. You're going to go stops underneath all of that demand. So you get about 25 cents of risk. You may need to go down the micro futures just to be in line with your risk parameters, depending on what that is, because 25 cents of risk is a lot. So you may need to drop down size a little bit. Targets, right now at this point in time, we want to look left at prior swing highs to assess targets. So depending on where this swing high is, if there's any other swing highs along the move down, we'll have to look left and assess targets accordingly. But right now, assessing a main target, that's pretty simple. It's going to be right up against these prior lows. If I can get my tool to work, that'd be great. Right up against those lows. Going to be the target. Where we came down, bounced, came down, bounced. We're trying to get back above it, hold it here. So we come down into the overlapping demand. We got entries identified, stops, targets. It's a good setup. It's not an A+ setup, but it's better than average. So what's my risk reward? I want to see at least a 3-to-1 potential on this type of trade. I get a 3.5. I'll take it. So that's going to be crude oil futures. All right, looking for the entry off of the overlap down at some of that bottom demand. Again, 61.90. Apple, quickly. All right, we got a nice little zone of resistance. I want to see a break and retest off of today. So if we can break and hold above this 230.80 to 231 level, we can break it, come down, retest it with good price action. I'm going to play calls here on Apple today up to 235. So from 231 to 235, we're going to catch about 4 points to the upside on this trade. $1 of risk is plenty. That's a 4-to-1 setup. That's Apple. All right, so again, just looking for that break and hold over that 230.80 to 231 zone. Good price action is all we need. We see that. We play calls. Stops go below that zone. Target, daily supply, right up at 235. 4-to-1 setup on Apple. Looks great. Top of the watch list as well. And then last one we got here for today is going to be INTC. INTC is inside of this big daily gap. I want to see if I can get long to trade it to the top end of the daily gap at $22.62. When I look at INTC on a lower time frame, I see yesterday was a beautiful day. We got inside the gap. We held inside the gap, held the bottom as support, and we saw a nice push off the bottom of the gap to the upside, broke some prior highs in the process. Nice leg on up, showing great potential to be able to come fill this gap completely up at 22.62. So where do I want to take a trade? Well, it comes down to doing some analysis. At first glance, the best of the best trade is back down at the bottom of the gap at 2104. I don't think we're going to get back down to 2104 because this is a valid leg to the upside. We broke those prior highs. I think we get a nice, healthy 50% retracement into some of this 1 hour, 30 minutes, 15-minute demand. And that's what we have here on INTC. Take a fib retracement from swing low to swing high. Take note of where that 50% retracement level is. You clearly see you have 1 hour demand. You go into a 30-minute time frame here. You clearly see we have some 30-minute demand inside of the hour. Go down to a 15-minute time frame. You got 15-minute demand inside of the 30. That's inside of the hour. And the overlap lines up at that 50% retracement level. So the simple fact that we have many confluences that suggest this is the area that we come down to before putting in that higher low and bouncing is why I want to get in here versus expecting that it's going to come back down to the bottom of the gap, right? It's more likely based on odds and probabilities based on what we've seen that we pull back towards around 21.25, hit those 3 overlapping zones of demand right into that 50% retracement. That's where the higher low builds. That's where we start to see the next leg up, and that be the move that puts us into the top of the gap. So instead of expecting it to come back down to the bottom of the gap because it was there yesterday, I see potential for this to come down towards around that 21. It's actually 21.27, 21.28. Hit those 3 overlapping zones of demand. That's a solid 50% retracement. We have good action down there. I'm playing calls for the next leg up into that 22.62 level. So this is what a plan is going to look like. And again, these trades, guys, that I break down with you, these trades that I'm building plans on, are trades that I put my money where my mouth is. I will take these trades if they set up. If you want to get in right around the overlap off that 50% retracement, your target's at the top of the gap. Even if you wanted to put stops back below the bottom of the gap just to play it super safe, you're still banging a 4-to-1. So that's good. Even putting stops below the bottom of the gap, you're still at a 4-to-1 setup. Hell yeah. If you want to put your stops a little bit tighter underneath demand and then underneath that 618 retracement, you're putting yourself in a realistic position to get almost a 9-to-1 setup. So regardless of where you put stops, they're both safe places for stops. Obviously below the gap is safer than under demand, but these are still both realistic areas to put stops to not get prematurely stopped out. So again, if you want to just open up the risk a little bit, play it a little bit safer, you're still banging out a 4-to-1 setup. That looks great. INTC, top of the list as well. So you got INTC broken down, game plans established. You guys are set there. You got Apple, we got ES, we have oil, and YM for today. All right, as always, stay blessed, traders. Crush it. Trade smart, trade safe. I'll see you guys in the next breakdown. Fact check me video on Friday.